Sort of a rocky start to the year for IPOs, Uber, Lyft, case in point. So what's happened in the last few weeks?
Well, I think we've seen some very exciting results. The IPOs that have been coming out are performing really well. I think this first starts out with pricing at the right mark, but then also the stories that they're providing, the growth stories, just the results that they're providing are excellent.
Is this a pricing thing, though? Have these companies seen the struggles of the companies that have come before, and are they underpricing? Because we can say that this is a good result, and it certainly is for the perception of momentum, but they're leaving a lot of money on the table.
Well, it's a good question. Are they leaving money on the table, or are investors and the retail investors just really excited about IPOs coming out? I think there's a lot to the latter there.
But shouldn't that be factored into the pricing? If there is that much excitement, shouldn't the bankers realize that and get these companies a better deal?
Well, I know that they're all working on it. It's a fine art here in pricing, but that said, I mean, I think the results are great, and we should just be really excited that these companies are trading up.
Now, what's interesting, Eric, for all the criticism that Uber's IPO has received, Uber's IPO has only now just started trading above its IPO price for the first time over the last couple of days, but of all these IPOs, perhaps Uber's was priced perfectly right.
Yeah, I mean, remember that they kept bringing that price down. There had been expectations, of a $100 billion, $120 billion IPO. So it's certainly far from what the company had once seemed to expect, or at least its prospective bankers at the time thought. But you're right. If the concern is sort of not making enough money in the IPO, Uber seems to have priced it really well, right around where it would end up trading. Obviously, there's plenty of time for the stock to continue to rise and for the company to look better.
Meantime, Jackie, Slack, of course, went public in a direct listing, which seemed to go relatively fine. What does it mean for all of the businesses tied into IPOs, including your business, including your work, if more companies choose to go this route?
Direct listings are very similar to IPOs, except you're not raising capital. That said, all the effort that goes in behind the scenes to make sure that you're successful as a public company, it's the same. And frankly, there's still significant involvement from investment bankers, the lawyers, the auditors, the accountants, the IPO advisors. All those folks surrounding those transactions are the same group wanting to make sure as a new public company, those companies are successful.
So what's the trend you're expecting to see in the second half of this year?
Well, the great news is this momentum has just kept everybody on track. I think there was early on this year a little concerns, and then just the volatility in the markets in general around what's happening with trade and interest rates. All those things have settled. Volatility is low, performance is high. That just sets up a really strong runway for our companies that are still in the pipeline, and there are a lot of companies in the pipeline.
Now, Eric, in the meantime, we're going to be watching how these companies that have just gone public perform. Uber had a couple of interesting announcements mentioning a potential boat service in Nigeria, working with regulators in Western Africa. What can you tell us about some of these more global developments?
Right now, I do think that the sort of financial analysis of Uber is really just going to depend on the performance of ride sharing, food delivery, where they're growing against the competition, and just getting more sort of quarterly results and seeing the trend lines there. Are subsidies going down? How's the price war with Lyft? I think that's going to be the core. These other ideas, whether it's buses or the continued expansion of bikes, I think are interesting to investors who want to know that there's a growth story ahead. But I think a lot of the value is still just around these core two businesses and understanding how much room left there is for them to grow.
Now, at least in San Francisco, there have been a ton of discounts from both Uber and Lyft. I just checked my email to make sure that I've gotten 50% off discounts on the next 10 or so rides from both of these companies in the last week. Is there something going on right now between the two companies, at least in the U.S.?
I mean, there's still fierce competition between the two, and they face this trade-off between needing to show growing revenues and profits. I feel it's always hard to get sort of a perfect window, and I'm sure more metrics will emerge from independent players. But these companies are very tactical, competing sort of differently in different cities in the U.S. and then Uber around the world. So I think we'll have to just see how that plays out in terms of losses. I think Lyft has said that this would be a peak spending year. So clearly, from the beginning, there's been this focus on revenue, which means spending on subsidies to continue to gain market share against Uber.
Jackie, will the outcome of the trade war, assuming there is some resolution, some decision, could that throw the next half of the year off?
I think just what the IPO market's like is certainty. So whatever decision is ultimately made, the markets will adopt it, absorb it. I think what we're going to see is that increased certainty will only propel the IPO markets further. So we want a decision made.